Hello, and welcome to the Invest with Carl podcast. I'm Jamie Eppenberg, your host today and a member of the Carl team. And today we are again chatting with Ernie Chan from our Carl Olympus strategy, which is one of our tail reapers. So I'll introduce, we've spoken with Dr. Chan before, so I'll give an introduction for those of you who haven't heard from him before. Dr. Chan is pretty much a quantitative rock star. That's what I call him. He's written 3 books on quantitative, algorithmic, machine learning in trading. So he's all about the numbers and the systems, to considerable acclaim with his book. He writes the popular quantitative trading blog, and he's worked for IBM, Morgan Stanley, Credit Suisse, Maple Ridge Capital Management, and he founded EXP Capital Management before he founded QTS Capital, which provides Olympus. So Olympus was based on QTS's Tail Reaper. So the official offering from Carl is Olympus. Ernie, welcome to the show. Thanks so much.
Thanks for inviting me again, Jamie. I'm glad to be here.
Yeah. So we actually brought on, if my memory is correct, we brought on Olympus in 2020, right? So you were actually the second strategy on the platform, I do believe. Mm-hmm. So thank you for that. So you've been running for the whole first half of 2021. And I know, I think what we want to do is just remind everybody first what Olympus is. They may or may not have been with us during our first chat. And then we'll take a look at a little mid-year review. So what is Olympus and how is it structured and how does it work?
Well, Olympus is a commonly known as a tail hedge strategy. Other people call it a crisis offer strategy. Yet others call it a long volatility or convex strategy. All of these imply one thing, that it will have a large gain when the market went into a tailspin, and it will just do nothing or lose a small, you might call it insurance cost during a peaceful period. So, I always, tell people the best way to understand it is as an insurance policy. You do not expect to make money from an insurance policy because usually bad things happen, when you actually make money. And that is the same idea with the Olympus. It's a insurance against market meltdown.
Right. And as a reminder, the last big movement from Olympus was in 2020 during the February and March when the market was reacting to the pandemic. Is that right?
That's right. We started the strategy. We started trading the strategy in 2012. And later on we signed up with the Carl platform, as you mentioned, in 2020. But the strategy had been traded by us for many clients and ourselves since since 2012. And in all those years, whenever there was a crisis, whether it was the Chinese stock market crash in 2015 or the Brexit and the Farmageddon in 2018, and of course during the COVID crisis last year, it always did this job, which is to generate a much higher return than what the market index lost. So, for example, in the first 3 months of 2020, it generated a gross return of almost 80%. That was before fees. But the market did not melt down 80% at that time. So it was actually people who are buying this insurance policy are not only compensated for their possible loss in the market index, but actually gain from the experience. And that is the whole idea of crisis offer strategy.
Right. So it did its job. It's done its job many times over the years. And I think you actually won an award. I don't know if it was earlier this year or late last year, but
Well, it practically almost always win an award every 2 years. Whenever, it seems that the pattern of
whenever it performs, right?
Yeah, there are too many to count, really, to be quite immodest about it. Essentially, nowadays you could see that the market goes into this pattern of every 2 or 3 years there's a crisis, right? 2015, and then Brexit, I think was it 2017 or
17,
somewhere
around
there, and then we had 2018, there was Armageddon, and then 2019 was all great, no crisis, and then 2020, of course. So the market has fallen into a pattern that every 2 years or so there's a crisis. And so every 2 years we won an award because we managed to deliver value during a crisis.
Yeah, and not only protect capital, but also give those who had the insurance policy gains on top
That's
of it,
right? That's
doing
right.
better than the downturn. All right, so thank you for reminding us of Olympus, and obviously we're gonna do a mid-year review here, which the first half of 2021, I mean, we haven't had a big dip, right? So I think the question on investors' minds would be like, well, how did you do in preserving capital, and how has it been going when the market's stable? And I don't know, did you expect a drop in the first half of 2021?
No, we did not expect a drop. We are, in a sort of what anticipatory state for the when the next shoe drops, really, because many people have expected inflation.
Right, that's the talk of the year,
factor. And they have so far been placated by platitudes from the Federal Reserve that this is a blip, nothing to worry. Once everybody back to work and inflation will go away. Well, we'll see if that really happens. So the market is in a state of suspended disbelief and taking a wait and see attitude. And so I personally expect the other shoe to drop in the next year, if not next half year. But that's of course speculation, and we don't want to speculate in this like long time frame. So in the last half year, tail ripper has performed as expected. It incurred insurance costs, as every insurance policy does. And but the insurance cost was not significant. That was thanks to our machine learning risk management layer. So the machine learning based risk management layer tried to suppress trades in the tail ripper strategy or the Olympus strategy when it does not detect any market risk or tail risk. And it did its job. It suppressed many of the trades. So we had a very normal loss in that first half year, which is the normal insurance premium that one pays for such a policy.
Yeah, and I think the last time we spoke, you said you did put a new machine learning or new something with the risk controls you had in place just at the end of 2019, I think.
Yes.
Okay, so those are still doing well then. Yes.
So, we constantly test the machine learning model against reality, and we constantly find value. That the drawdown always get reduced by applying machine learning. And we are constantly adding so-called features to the machine learning program to capture more aspects of the market. So there is, frankly, not a day where no new research is being done. We continuous every single day. Active research is being done to improve the risk characteristics of the strategy.
Right, but obviously it did its job properly, which is you want it to suppress when there isn't a big move anticipated. But if that was put in 2019, you still caught February and March of 2020, so it didn't stop that.
Exactly.
So yeah. Seems simple, but obviously complicated systems and and a lot of computer coding, machine learning, and AI to put it all together. So you talked a little bit about you might, and this is just what we say is it should, because there's a lot of talk about inflation and what's going to happen, and everyone's a little bit preparing for a market downturn. A lot of people I've talked to, that's just a matter of when they think is a lot of the people I talk to. So not to project, but that's a lot of conversations. I guess you would say that Olympus is, as far as you can tell, it still remains very prepared.
That's right.
For that.
That's right. Yeah. Every day we look at the market, and actually recently, our risk management layer decided that there is market risk in the horizon. So it has been actually trading the full buying power, the full leverage that we allow it to trade. So yeah, I mean, if we were to believe in machine learning, which we do, tail risk is in the horizon, at least for the foreseeable future.
Yeah. And we always tell our investors that can change. The machines review conditions every single day. So they may adjust, but if I have to be honest, if that's where the machines are today, that they're kind of expecting something, there's a lot of humans saying the exact same thing.
Yeah, exactly. Yeah.
I guess we'll all see how it plays out. All right. Is there any other information on Olympus that could be interesting for users? Or, actually, I'll ask this. What do you think about putting insurance into a portfolio? There's a lot of debate from time to time amongst investors who I talk to, or they're like, obviously it's not going to do well in a good market, in a good or flat market. What's the total value of it? Should I be putting it in something else? What would you say to those kinds of investors?
Well, I always advocate looking at what the investment manager does to his own money. And, for me, I would say the simplest investment one can imagine is to just long the market index and then add a tail hedge component to it so that you won't be greatly affected when the market crash. And so definitely a model portfolio of 1-to-1 allocation to a market index and to tail ripper historically never had a down year.
Never had a down year. And come out well ahead then, in your opinion. Yeah.
That's right.
Yeah. All right. Well, Ernie, thank you so much for being on the show. Great information for our investors. It'll be interesting to see as Carl continues to grow, how investors use the tail reapers and put insurance into their portfolios. It'll be, I think, interesting insight to see how retail investors do that. Thank you so much. Thank you, listeners. We will see you soon. See you next time. Bye-bye.
Thank you, Jamie. Bye-bye.
Thank you for listening to the Invest with Carl podcast. The views shared on this podcast do not necessarily reflect the views of Carl. This podcast is intended for informational purposes only and is not intended to constitute and should not be deemed to be an offer to sell or a solicitation of an offer to buy any security or investment, financial advisory, legal, tax, accounting, or other professional advice. Carl funds are currently available to accredited investors with a minimum investment of $20,000. To learn more about Carl and to download the Carl app, go to investwithcarl.com.